Does timing the market work? With all the recent stock market hype, more and more people are looking for ways to time the market and buy and sell stock at the right time to make a profit. While it is an alluring strategy, timing the market and actually getting it right is very difficult. And even the professionals don't get it right most of the time. Hi, I'm Brittney Castro, and this is Learn. Be sure to subscribe to get more videos like this. Studies show that timing the market accounts for less than 2% of a portfolio success over time, while asset allocation accounts for over 90% of a portfolio success over time. Yet, with years like 2020 and 2021, more and more people are investing and have the time to be at their desk all day trading to do their best to try to time the market to strike it rich. The reality is, timing the market is actually very difficult to do. Figuring out when to buy in and sell out at the right time to make a profit is nearly impossible, and even the professionals cannot get it right most of the time. In 2019, a Vanguard study showed that only 35% of active fund managers beat their market benchmark, and they're professionals. Yet the idea that you have a crystal ball and know exactly where the stock market is going to go or any one stock price will swing in any given day is a trap that many fall for. The S&P index from 1990 to 2019 has had an average annual rate of return of 9.96%. So if you invested $1,000 in the S&P index in 1990 and left it the entire time, at the end of 2019, your portfolio would have been $17,273. But let's say you try to time the market and get in and out of the S&P index at the right time to capture a little more return, but instead miss the best trading day in that almost 30-year period of time. If that was the case, then your average annual rate of return drops to 9.56%. Now, let's say you missed the 25 best trading days in that same time frame. Then your average annual rate of return drops to 4.99%, making your total portfolio value just $4,314, which is a huge difference. So the moral of the story is, market timing is difficult, especially with technology and the fast-paced trading world we live in today. Not only is it hard to do, but it is stressful, as you can experience FOMO for not getting in and out of a security at a right time and making that profit. And you might need to be glued to your screen daily just to read the charts and try to figure it all out. So while you think you have an edge of knowing when to get in and out, you'll probably be better off going to Vegas and gambling some of your money. Instead, focus on finding a long-term strategy that makes sense for you and takes your goals, time frame, risk tolerance, tax strategies, and everything else into factor, and create a more buy and hold strategy for 90% of your investable assets. And if you want to take the other 10% and do a little more trading in specific investments, then have at it and enjoy. Just understand the risk. Be sure to visit altruist.com/learn and subscribe to get weekly videos and articles. And of course, follow us on Twitter, Instagram, and Facebook to join the conversation.